Well, good evening, ladies and gentlemen, and thank you for being with me this evening. It's good morning to our friends on the east coast of Australia. Good afternoon, those of you across the ditch in the Shaky Isles. It's grand to have you with me. I'm going to shock you today. I hope you stay till the bitter end. It's some extraordinary stuff. How's the volume, folks? Would somebody just type into the question box if you can hear me okay? Yes, good. Jay, thank you. Mr. Deck, haven't seen him for a long, long time. Good to have you with us. Pine, glad to have you with us. Sammy, even better. Gosh, we've got a good lot of people today. Nice to have you all, folks. Very nice to have you. Okay, so this webinar today is going to show you some stuff that you haven't seen before. And as I do these webinars twice a month, bi-monthly, I would normally say fortnightly, but I know that fortnight is not a expression that our North American cousins use, but it means 2 weeks. Greg's son is very good at that. He thinks it's hilarious. A fortnight is 2 weeks, but I'm always amazed. There's always something new to show you. This is pretty dynamic today and pretty exciting, and I think it's going to knock you out. So bear with me. We've got to recap a couple of issues early, and then I'll show you the dramatic stuff, and it is dramatic. Okay, so here we are. We know that, I should say, that markets are rational, orderly, and sometimes predictable. That's not a view that everyone has. People who don't know how to trade, particularly, I should specify, don't know how to trade the Danielcode, are constantly frightened of markets. They believe markets are in a state of continual drama, and they're not. They certainly have their moments of drama, but by and large, markets are orderly and sometimes predictable, which is pretty nice. So we'll see what we can get from that. Now, a few of these slides at the beginning here, folks, you've already seen if you were with us at our last webinar, but we're talking about probabilities in a slightly different way today. So I just want to recap a couple of items here. And probability theory is actually a branch of mathematics that's concerned with the analysis of random phenomena. When we're talking about markets, the probably the most read and most tested theory is an article called Random Walk Theory, for which the authors, one of whom was Robert Shiller, who's a very famous economist in the States, they were awarded the Nobel Prize for analyzing the Dow and essentially proving that the next bar was always a random event, and the actual outcome is considered to be determined by chance. Well, the Danielcode busts this theory. The Danielcode is completely opposed to that. So who am I to take issue with such famous people? Well, you can make up your own mind about that. And the extreme end of probability theory is what's called the 500 monkeys theory, which is basically an old story that if you lock 500 monkeys in a room with 500 computers, it used to be 500 typewriters, to show you how long this has been around, for an infinite period of time, one of them will eventually write Tolstoy's War and Peace, or better still, the Bible. And that's the start of most commentary on random numbers. So when you get to the end of this webinar, I want you to consider how random are numbers when you apply the Danielcode to markets. And you can look at over 45,000 Danielcode members charts that I've created for you since 2008. All of them are automatically filed under our chart archives tab with a suitable delay to protect our members' interest. But go to the website www.thedanielcode.com and click on the link Chart Archives. Go through them, have a look. You'll be really pushed to find a market that's ever turned anywhere other than at a Danielcode number. And that's what Danielcode trading is all about. So when you start thinking about the basics of trading markets, you're faced with a juxtaposition. I don't know what markets will do tomorrow. Nobody knows what markets will do tomorrow. And if anyone tells you they do, I suggest that you run far away. But trading requires that we trade to optimize the probabilities of the future. So the probabilities of what the Danielcode discloses to you, that's your edge. That's what's so different to the for the Danielcode from anything else. And as I've said, random walk theory is the most adopted ideas and thinking about markets. And the Danielcode is completely opposed to that. We say that's not so. We say markets are orderly and sometimes predictable. So what we're going to be talking about today is real support and resistance and how you use it to make buckets and buckets of money. They're vital elements of trading. And most folks don't actually know what all that is. We see a lot of charts with faux trend lines on them masquerading as support and resistance. Moving averages are also touted as support and resistance. The only real support and resistance you'll ever see on a chart in talking about price is old highs and old lows on daily charts and Danielcode ratios on all time frames. To that, I have to add, you don't see the time cycles expiring. They are just as precise as the price levels. And what's really interesting about the Danielcode, I should say amazing, is that the analysis of the Danielcode, where it comes from, actually gives you a whole lot of ratios based on time. These are time cycles. And we then take those time cycles and we use them as price. In other words, time and price are the same thing on different axes. And I know it's very hard for people to think that that's real. But have a look at those 45,000 plus members charts under Chart Archives. All of those red and blue lines you see on those charts running horizontally, that is their price levels, they are Danielcode time cycles. Pretty quirky, isn't it? But we've been doing it a long time and we've got a lot of happy traders. So let's have a look at the high probability strategies. The most important of them is that markets react with great precision to the Danielcode red and black line retracement ratios. They're price levels. The blue lines are another form of price levels. The red and black lines traditionally are retracements of a known range. The blue lines are extensions of a known range. But the main point is markets will turn at and only at the Danielcode support and resistance levels after target recognition. And in the Danielcode lexicon, target recognition occurs at bar high lows or on the close. It's valid for a number of days, but it's limited to 0.1% variance. That's not 1%, it's 1/10 of 1%, and usually much less. And you're going to see all that today. I mean, that is staggeringly accurate. And you won't see this anywhere else. So Danielcode ratios, there are 5 ratios from Daniel's code, 2 ratios from the rule of 8, 1 self-selecting ratio, and they're all ratios in time. And I should say that if you're doing a tutorial with me, whether it be of price or of time, and I've got a big announcement coming up today on those tutorials, the first thing I say to you is that knowledge can come from a number of different sources. You might have gone to a lecture with a person that was suitably qualified and had a reputation, and you said, I learned this from my lectures, and I believe it to be true. Or you may have read it in a book on the same basis. A reputable person skilled in that particular area of knowledge, you say, I read this in a book and I believe it to be true. Now, they're good forms of knowledge, but a much, much better form of knowledge is I learned this for myself. In other words, if you do a Danielcode tutorial with me, the very first lesson, which is less than 2 hours, is I say to you, I want you to discover the Danielcode for yourself. In other words, we'll run through the procedure that took me about 7 years, and you'll do it in about an hour and 30 minutes, because I'll give you some of the, they're not shortcuts, they're dredging, if you like, at parts where the channel is blocked. And once you see them, it becomes so obvious. That's the best sort of knowledge. Once you have that sort of knowledge, your brain accepts that because it knows that. So you've seen all of this, but I want to stress to you another point, item 3 in here. Markets are always trying to talk to you, but you're not listening. Very few people understand this, and you should. Markets constantly demonstrate their rule by the Danielcode, but this idea that markets are always trying to talk to you is quite stunning, because they talk to you usually every 2 or 3 bars. And if they don't talk to you in those first 2 or 3 bars, you'll know that the time cycle or the price cycle that you're looking at is not valid. The market switched to a different cycle. And you will know, if you do a tutorial, you will know all of those cycles anyway. So they are chatterboxes. That's what I say. The purpose of derivative markets is to reward those that understand. Few do. But markets have always tried to talk to us. The problem was that before the Danielcode, we didn't have the language to understand them, and now we do. And, as I say, after 30 years or so watching and trading these markets, that's derivative markets, and you can add on another decade of looking at stock markets. I'm still excited to see what markets have to say every day. And I'm deadly serious about markets talking, and I can teach you their language. And once you know, it's like everything, all of this stuff really is like the wheel. Once you've seen it, you say, wow, that's simple. I get that. I understand that. So this week, I had a tutorial with Ken from Idaho. Now, Ken, I don't know if he's here with us. Let me look quickly. Oh, Gakshay's here, George is here, Graham's here across the ditch in New Zealand. I hope your hand's healed, mate. Greg, the Colorado, he's a wealth manager in Colorado, but he's spending a lot of his time in Texas these days. Mr. Greg Palladini, grand to have you with us, Greg. For those of you who haven't already, make sure you go to forum and look at the thread that says Danielcode Trading Tutorial. It's written predominantly by Greg Palladini. Greg's a very, very good trader and a wealth manager in California. He's been a Danielcode member since 2015. He did a tutorial with me in 2016, and he came back last year to do another tutorial to learn trading time, because I wasn't teaching trading time back in 2016. So that was grand of him. Harold Foose is with us from Reading. Harold, what a delight to have you here. Harold's the most delightful bloke in the world. I did a tutorial in Reading once for Harold and some other chaps from the big church there. Wonderful place. And Harold was most gracious as our host while I was over there. Wonderful, wonderful gentleman. Hope you're feeling well. Harold, Jay's with us. Jeff, of course, is with us. Good to have you. You're still with us, Jeff. I know you're not always been pleased with us, but you're still here, which is wonderful. Joe's with us. Mark Kay's with us. These are all tutorial guys. That's wonderful. Mark L., big story about you, mate. I have to tell you, forgive me, folks. Mark L. has been a Danielcode client for many, many years, and he did a tutorial a number of years ago, and his ambition's always been to be a full-time trader. But he's an absolutely par excellent manager, and every time he thought he could retire and trade full-time, he got offered another job with the conditions so good that he couldn't refuse it. But anyway, I had an email from him yesterday to say he's finally retired and looking forward to trading full-time. Grand to hear from you, Mark. We'll be talking soon, I'm sure. Miles, grand to have you with us, of course. Milton, he's been one of our longest-serving members. Wonderful to have you with us. Peter Mack, who's not a day trader. Sammy, yes, Sammy's new, Pine's new, grand to have you with us, guys. Trevor's a wonderful Danielcode supporter, great to have you with us, Trevor. And Vicky, as I always say, we have very few lady members, which is a shame because trading's a wonderful, wonderful pastime for ladies. In fact, in Japan, where Forex is pretty much the national entertainment sport, the vast majority of traders are ladies. Anyway, Vicky, grand to have you with us. Thank you. So to revert, I was having a tutorial with Ken on Monday, and Ken is very much a senior citizen. I usually say to people when I know their age, well, you're a lot younger than me. And Ken wasn't, so that certainly makes him a senior citizen. But I thought Ken's name was familiar, and in fact, I knew him from about 30 years ago. And he was involved in the futures trading business then, and he's actually been a futures broker for long parts of his life. And as such, he's seen every strategy under the sun, but not the Danielcode. I'm going to show you in a moment Ken's trading of US T-bonds using Danielcode time signals with some support from me. But he did very well. He knew I'd already taught him the basic lesson on trading Danielcode time signals, creating them and trading them. And he did, I've got to say, the vast majority of the work on his own now. I'd been talking to Ken in the first hour of our webinar about what I found a really, really interesting question of how you update the time signals to real time. And I'm talking about millennia here. It's a highly theoretical subject, but I'm interested in that sort of thing. But I could tell Ken wasn't. When we got to the end of our first session, what Ken said to me is, I want to trade futures every day. I just want to trade futures every day and make money. In other words, cut to the chase. I'm not interested in the theory. So that was interesting. I said to him, all right, well, you choose the market, any market. And he nominated US 10-year notes. And I said, well, I don't cover that market. I don't have a chart for that at the moment. So he said, well, what about T-bonds? Same thing. I said, fine, we'll take US T-bonds. So I opened the US T-bond chart and the period of time was just what was sitting on the computer at the time. It's the first one we looked at. And there was about 2 months of trading potentially in there. When you see the results of that, it's going to knock your socks off. The amount of money that Danielcode time trading makes is fabulous. When you get some volatility, it's out of this world. It's the most profitable of its kind. That's trading time. But trading Danielcode price signals is the most profitable of its kind that I have seen. I'll come back to that issue of trading price, but Ken selected the market, and we agree that we trade it the worst way possible. In other words, there are some strategies such as valid to exit, which appeared on this chart, I think 3 times. We didn't take any of them. As I said to Ken, I just trade the market. I don't worry about that. I do tell you about it when it's valid to exit in the success strategy, but I don't do it myself. I just trade every signal. So we agreed that's what we would do. When you see the results, it's going to knock your socks off, and it should. It's stunning stuff. Here we are. Let's see what next we can find. Here it is. This is Ken's trading of the T-bond chart. And as you can see, some clouds have got in the way of some of it, and that's necessary because I don't want to make it too easy for this to be reverse engineered. There's always people who have learnt that it's much cheaper to steal something than to create it. So this is the Danielcode time trading strategy on Forex, on a US T-bond, I should say, and it ran for a 2-month period up to August the 1st. We've had a few more bars since then. That trading returned $17,500 in wins and $4,200 in losers. Now, you've heard me say that the Danielcode doesn't have a very high win rate as win percent, which some people are concerned with. I can actually give you a program that has a 92% win rate, but it doesn't make any money because it's too obvious and there are not enough trading opportunities. And the business of trading, as I say, is the business of making money. And the Danielcode makes us money because its average win is twice or more than the average loss, sometimes considerably more. As you can see here with this piece of trading over 2 months, the average win was $1,900. The average loss was less than $700. Now, paper trading is not the same as real life trading. Some of the bars where it was a question of whether we got stopped at or not were not so clear. We didn't go to the 60-minute chart to get the absolute detail. We eyeballed it, but there will be an equal proportion of right and wrong assumptions. So paper trading does tell you what the probabilities are, and it does tell you more than that what the possibilities are. So have a look at this. So we started off with 17,500 in wins and 4,200 in losses. I've got 4,000 on there for some reason with 4,200. So that gave us about 13,000 and a couple of hundred net profit over the 2 months. Think about that. 13,000, I discounted, with 13,600 or so net profit in the 2 months. I discounted $1,600 of that. I said, let's take away $1,600 for slippage and for our 2-tick buffer, which you all know about. Let's call it $12,000. Well, $12,000 for 6 months, $72,000 a year. Can you make that assumption? Sure you can. It might be right, it might not. But it's pretty sensational either way, isn't it? And the probabilities are, yes, we've been getting some good volatility in T-bonds for a long time now. Those of you who've been with us for a while will remember me showing you the long-term trend chart of T-bonds taking out its low and where I said it would go, which it pretty much did. The odds are about equal that we get more volatility or less volatility as the year goes on. But we're going to get volatility in any market, and we get the same sort of results from all markets, futures and Forex combined. This happens to be time trading time, Danielcode time signals. And I'm going to talk today largely about trading price and show you an area of trading price that you haven't seen before, which is very, very dramatic. Ken had been not too excited about what I'd been teaching him, but I can assure you at the end of this hour, he was a very, very excited gentleman. And as I say, we've been a futures broker for large periods of his life. He's seen everything, but not the Danielcode. And he was absolutely shell-shocked and amazed. And he did this work pretty much himself. As I said, he picked this chart himself at random. It's not a market I would have picked. If you ever asked me to pick a market, I'm going to say natural gas or cocoa because they tend to be the most flamboyant. But he picked this market. He got those results. Yes, it's true that paper trading is not the same as real life trading. All sorts of little things happen with real life trading. But by and large, if you've got a set of rules with immutable rules, with rules that can't be changed or altered, which is what Danielcode teaches you when you do the tutorial, you never have to make a decision because you have your rule and they're all if-then rules. If the market does that, you do this, and they're absolutely set in concrete. There's no discretion at all in how you set up your trades, and that's the great gift. So that was pretty staggering, and I hope you found it staggering as well. So let's move on and look at a bit more information on that same chart. Let's stick with it. It's US T-bonds. And the one I just showed you was the 057 chart, which is Trade Navigator's version of a continuous chart. And they just take the front month and slap that on where it should be, and that causes some gaps on rollover, which is why they have what they call a back-adjusted chart, which I do not suggest you use. So this is actually the front month. We're talking about trading now, January for a couple of months. Well, no, nothing like January. 2022, the front month was before that we started trading, right up to Monday of last week, as I recall. Have a look at this chart. You can see there's a whole lot of little black dots on it with green slashes underneath them or above them. That's telling you that those are gaps. And this chart actually starts, the first bar is December the 17th, 2021. It's currently the front month, excuse me, in the futures markets. This is the December 2022 contract of T-bonds, which is the front month, but the contract itself starts in December 2021. Now, we can see there where this became the front month. This idea, this pattern of no real trading. I mean, all those dots are open and closed, and no transactions going through. But that's a common thing you see on your charts, particularly soon after rollover. The Nasdaq's notorious for it. And if there's not a lot of future hedging in that month, this is the sort of pattern you get. So you get the Never Never land of the two dots together, and the green bars telling you that there are gaps in there because there was no trading in that market for those periods. And you can see when it becomes the front month, which was May 30th this year. Okay, let's move on. So let's talk about real support and resistance. And now we are talking about trading price. So I'm at present teaching my son, John, to trade markets. He's never been interested until recently, very recently. He's a delightful young chap. He's 25 years old. He's got 2 university degrees. He's got a bachelor in film and television from Bond University, and a bachelor of psychology from Southern Cross University, both of which are here on Queensland's beautiful Gold Coast. And in the process of teaching him, I've dug into some stuff that I used to do with price. And I don't think you've ever seen it. In fact, I'm not sure that anyone's ever seen it, but you should find it amazing. So let's just start here pretty simply. All I've done here is I've put on the Danielcode blue lines. Now, these lines are extensions of the range. Then we have the red and black lines, which you'll be familiar with. They are retracements of the range. So they're fine to use, very important to use when you're having retracements of the range. But once you get outside that range, you need the blue lines, which give you the extensions of the range. And they're working on all part of the Danielcode ratios, but different groups of those same ratios. So you can see the blue lines gave us the low there at 140 caret 30. That little arrowhead is called a caret, and gave us the low just about perfectly on June the 16th. That close was 131 caret 13. The blue line is 131 caret 12. 1 tick variance. And that was the closing low as opposed to the chart low, which comes 2 days later. Only a differential of 1 tick, but these are the magics that make markets move. So you'll see here that all markets turn at and only at the Danielcode numbers. And if you know that and nothing else, you should be one of the best traders in the world, because whatever system you're using, however you're trading, if you're putting on the Danielcode numbers, and for which we create 9 Forex charts and 11 futures charts, they're prepared and updated every weekend and on Wednesday night. And for the other markets that we cover, I also maintain the charts, but we don't publish them, but we do create the signals from them and put them up in our TO3 or TO3 plus signals for you. So here are the blue lines, which starts by finding us that low and defining it very, very accurately. And this is what I want to talk to you about. I've recently had inquiries for the tutorial, Danielcode tutorial, from a number of people, obviously very genuine people, heard about it on a webinar or read about it on the website. When I've sent them the information, they haven't come back. And obviously we're seeing inflation is a big thing at the moment, and it's happening everywhere in the world. Don't believe it's only happening in your neck of the woods. I mean, the price of petrol and food stuff in this country has become absolutely astronomical and extraordinary. And it occurred to me that it's a bit of a load. It's a lot of money. $7,500 is what I charge for the full tutorial. And that's a lot of money, and we're going to break it up. So I'm going to offer this to you as separate exercises. The first one will be learning Danielcode price trading, a lot of which you're going to see today. And the new fee for that is US $4,500, terms available on $2,500 deposit. And DC time trading, same thing. We've split these two disciplines up, $4,500 with terms available. Or if you want to, you can do the both of them together in a full Danielcode tutorial. So by splitting these up, you're going to get everything for half the price, basically. I'm trying to make it more affordable for more people, because it's silly to think that this is remaining, and still is, the best secret never told, in fact. I mean, I had a delightful student with me in the last week or so, and he was a professional golfer. He lives in North Carolina, pretty close to Gig, or Gig's holiday home at least. I'm not sure if they're with us today, but when he found out about Danielcode trading, particularly trading time, he was shocked beyond belief. He said, are you safe? How do you keep your security? He said, they'll kill you for this. And it's that good, but we still are a very, very small business, and we never advertise, so people only learn about this by word of mouth. And strangely, something new, amazing, stunning in any other area of achievement, it gets rewarded, gets talked about. Tell your friends about it. This is a great thing. Get onto it. Funnily enough, with the Danielcode, once they've learned about it, the most common comment is, crikey, don't tell anyone about this. But I assure you that we are absolutely not even an ant's wing on the size of the Forex and futures market. And that in all the years I've been following it, markets with the Danielcode, nothing's changed. High frequency trading, this, that, and the other, new markets, electronic trading, all the changes in the world, nothing's changed how markets react with the Danielcode. So please tell your friends. Please, if you've inquired about a tutorial and decided that $7,500 is a bit much at the moment, I understand that entirely. Everywhere, as I say, inflation's having a big bite. But you can do this in any order you like. You could do price first, or you might do time first. Or you could do them both together, whatever you like. The idea is to make this more accessible to you, and I hope that that'll happen. As well as that, if you've done a Danielcode tutorial before, and you're prior to about 2017 when you did it, you probably don't know about trading time. So if you want to get right up to date with new teaching and Danielcode time trading, $4,500, be happy to bring you absolutely up to date on everything that's happened and what I've learned and taught since your meeting. Okay, so let's keep looking at markets now. We're talking about price. Don't get bored. It's very, very exciting what I'm going to show you. So old lows are supposed to become resistance. This is traditional sort of trading. Old highs are supposed to become support. And to an extent they do, but it's pretty marginal. They are valid on occasions, but they're not a tool that says that's going to stop the move and turn the market. It will happen occasionally, but that's about as high as you can put it. It will be valid occasionally. So have a look at this. So when we look at a chart, you can see here we've got two obvious swings. We're working from June the 16th going forward. And as you look back, you can see swing number 1 to that high. Swing number 2 is just a bit higher than that. And swing number 3 is the really big retracement that goes right up to the top. So what about markets talking to you? The first point is that these markets will talk to you every 2 or 3 days. If they're not talking to you, it means that sequence is not valid. Have a look what we've got here. I'll just get a tool that I might be able to show you with the crosshairs. Are probably the best. We've got Danielcode, we've got tools everywhere, drawing tools. That looks like a good one. Here we are. Here's the spotlight. Let's see if this works. So down here you have your blue line, and that's the low. Start counting. The actual closing low here is the bar that's got the arrow on it. June 16th saying close with 131.13. That's target recognition against 131.12. From there, don't count inside bars, just count the bars that are not inside bars. This big outside bar going up is bar number 1. The next bar is bar number 2. Then you get an inside bar, and the last bar down is bar number 3. Now, to that stage, I have not seen any target recognition. It could be that this small final bar down has got target recognition at the high, which it certainly does, but that's not what I'm looking for. If the market is rallying, I'm looking for target recognition either at the bar high or on the close. If the market's pulling back, I'm looking for target recognition either on the true low or on the close. So we've gone 3 bars, and I'm starting to think the market is not reacting to these price levels, which are also time cycles. It must be using a different cycle. Bar number 4, which is this one here, goes almost exactly to one of our price levels, 136.12, and it closes at another one of our price levels, 135.25. And that's the market's way of talking to you. And what it's saying is, I know these numbers and I'm tracking them. And you get the same thing up here with this bar here. I've got an arrow on it saying that 140.17 is resistance. The market is saying, I know these numbers and I'm tracking them. And if you don't get that feedback from the market, it's the wrong cycle. It could be the wrong cycle in time, or it could be the wrong cycle in price. Okay, let's move on from that. Here we are. So what is target recognition and how precise do we want it to be? Well, historically, since 2004, when we started running the Danielcode, I did at least, we've demanded that target recognition is accurate to 0.1%. That's 0.1%, tiny. And remember, most markets were a lot cheaper then. You look at the price in gold from 2004 to today. You look at the price in equities, they're just different worlds. But this market, that's the US T-bonds market we're looking at, it runs from about 149 at its highs, this period we're looking at, down to 131 near the lows. So near the highs, 0.1 is 4.76 ticks, call it 4.8. Near the lows, we convert the ticks there and multiply by 0.1%. We have 4,192 ticks, so 1% of that is 4.19, call it 4.2 ticks. That's extreme precision. That's like not even a hair on these charts. Target recognition is valid at the bar high-low. Remember, we always, not always, need them, always use, that's the result of starting work on this at 4 o'clock this morning. We always use true highs and true lows or the close. Both are valid. So we've done swing number 1 retracement. Let's move on to swing number 2 retracement. Now we get 2 more lots of very, very accurate target recognition. And in fact, the big outside bar up that started this move, it should also have a note on it saying that is target recognition, both on the high and on the close, as is the next bar. But I've shown you the obvious ones here. Remember, target recognition can happen on the bar high, low, or the close. So we've covered swing number 1 and swing number 2. What about swing number 3? Well, for each swing, we have an equal number of Danielcode retracements. So if we have 3 swings, we should have 3 lots of Danielcode retracements. But look where this swing is. It's getting into that area where there was no trading, where there are just dots and lots of the green lines, do you see? But we've put our normal Danielcode retracement tool to work, and we found a lot more resistance, which for us means target recognition within that level of accuracy. Now, most of you have seen all this stuff. Let's see what happens next. So the red and black retracement levels are non-correlated. That's very important because you don't want to be trading anything that's correlated because you keep duplicating your risk management. So we've got that far, but what now? We run out of retracement swings. What else can we do? Well, now we can use the blue lines to give us extensions of the range. So these are what the blue lines show you. See this on all your Danielcode members charts. As you can see now, we've got pretty much every high that's showing target recognition. I've marked them with a little black diamond. Make it easy to see. They're the Danielcode blue lines extensions of the range. So what about something funky? I know you're not going to believe this, but have a look where this chart goes to. Where the high is, I've put a circle around it to show you what we're talking about. This is back in March 2022. There's no volume. This has not become the front month for another April, another 3 months. All that is an open and a close, most of them. Some you'll see a tiny little bit of movement on. The vast majority of them are, and there's one with a little bit of movement, I should say, but the vast majority of the 2 dots are just the open and the close. There's no price action in there, or virtually none, because no one's trading. There's no volume. Okay? So, want to see something funky? This is pretty funky. Have a look what we're looking at here when we just put on our retracement from the June 2022 low all the way up to the March high where there was no trading. But yet, the targets, the market, the targets that we have set with our Danielcode tools are getting hit. And they're getting hit precisely. And they shouldn't be, because there's no volume up there. It's complete rubbish to think that those are real prices. Here's the weird thing. They actually are. Look at that. And I've said here, is this even possible? What we've done is we've taken a swing from the June 22 low all the way up to the first day of the chart. The very first 2 black dots. Open and close, nothing else. That's swing number 5. It shouldn't be possible. You should have absolutely no reaction to those price levels. But you do. Look at them. I put the black diamonds on them. 1, 2, 3, 4, 5 highs. Happening exactly at the retracement of that range into no trading land. Is it even possible? Yes, it is. I've seen this before many times. I don't think I've talked to you about it, but it's quite amazing. So how accurate are these turns that we're setting out for you? Well, here's a list of the actual variants. They range from 4 down to 2. 4 ticks, 2 ticks. That's nothing. That's not even a human hair. That's like absolute precision to the micro abraded version. And you can see just how incredibly accurate these charts are. Let's look at something else. This is the same cycles repeating from 1. In other words, once your cycles have run past the level at which your retracement tool shows, they actually start again from 1. In other words, they're cycles. They just keep on repeating. They run through their sequence and they start again. They run through their sequence and they start again. And as you can see, magical stuff, isn't it? Every high, remember, when I prepare these charts in the form I'm showing you, they're either designed to show high or they're designed to show lows. They're not the same thing. But for these series of charts, this one, like most of the others, was designed to show you the highs. Have a look at this now and tell me, have you ever heard of anything like it? What I've done is I put these vertical lines on the dominant swing lows. In other words, swing lows that were more than a 1-bar counter trend. You see we start up here, there's a swing low. Here there's a swing low. Here there's a swing low. It's the bar before the down bar. Here's the swing low. Here's the swing low. And here's the swing low on the close. This is Danielcode target recognition on the close, the last one. How have we got those numbers? Well, the Danielcode retracement tool, which you know as our red and black retracement tool, actually creates these numbers because it does it, excuse me, in a different way. And what you have to do if you've already got the Danielcode retracement tool is instead of running it forward, you have to run it back. I know that sounds a bit convoluted and it'll be hard for most of you to see or understand, but basically all of these black lines of price are variants of the lines within the red line, but they're extensions of it. So instead of being 29.6, the line would be 1.296, if you understand. And after it's run through those ratios, it would then start recycling at 2.296, etc., etc. Look how accurate these things are. And we're talking about taking, for the start of these, we're talking about taking a swing from this high here, which is nothing, it's just 2 dots. That's just an open and close, surrounded by green slashes to show there was gap, 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 gap. Now, for almost all the trading world, they just ignore that. They won't start looking at this chart until it's become the front month. But you're looking at it. You're learning something nobody knows. It has never been said or even thought that these sorts of patterns up here can give you meaningful Danielcode support levels. But it does. Look at it. Here's 1 right here. Here's 2, exact. Here's 3, exact. In fact, double. This bar's low is right on the first little line. The outside bar's low is right on the next line. Right on this line. Here, this one shows you target recognition on the close. Okay? How accurate? I've shown you how accurate. 0.1%. 4 ticks. Extraordinary, isn't it? You ever believe that was possible? I don't think anyone's ever thought of it before. But that's the power of these Danielcode ratios, that they shouldn't work, but they do. And in fact, the next question to ask is, what about the downside? I've just been showing you the highs. What about the lows, the downside lows? Every single low there comes at Danielcode target recognition, just using the standard red and black retracement lines. If you subscribe to our website pro subscription, which is the $249 a month, we'll give you the Danielcode retracement tool and the Danielcode time cycle tool as part of your subscription. So get signed up, get the tool, start working with it. Just knockout stuff, isn't it? What about that low? 132 correct, 22 is the blue line. That's one tick variance from the close. It's extraordinary stuff, isn't it? Okay, let's keep going. So what about Forex? Exactly the same. What I've done here is I've used the Danielcode retracement tool, that's the red and black lines, instead of using them as retracements, which we know works perfectly. You see that every day here at the Danielcode. I've used them to create extensions of the range. But because they're using all of the ratios that the retracement tool uses, they're different to the blue lines, which are extensions of the range. Are they accurate? Have a look at this. I mean, there's one swing. I've marked it with a red triangle on it. Have a look at the red lines, the black dots, I should say, that have shown you target recognition. 1, 2, 3, 4, 5, 6, extraordinary. And, of course, I haven't put the black dot on the low because you already had the target recognition and the buy signal 2 days before and the day before in two different forms. Forex, this is Euro USD, works exactly the same as futures. Let's go back to normal. This is still the Euro US dollar. Let's go back to our normal Danielcode retracement. Same thing. 1, 2, 3, 4. Perfect, almost perfect. Target recognition by anyone else's value. Perfect. What's the variance? Less than 0.1%. And markets are talking to you all the time. They're saying, I know this number and I'm tracking it. And if it's not saying that to you within every 3 or an absolute maximum 4 bars, you've got the wrong cycle. So this is not about fitting the market to anything. You can't change these ratios. They get longer and shorter as you're covering a longer or shorter range, but you can't change them. They're set in stone. So they are as close to foolproof. And some of you have been with us since we started in 2008. You've seen this stuff for years and years. What about we go to a totally different market? This is gold. This is the front month at the moment. This is the December 2022 contract. We're actually taking ranges from the dots where there was no trading going on. And as you can see, we're back in February 2021 to measure our first swing. Crazy, isn't it? Everyone just ignores that early part of the chart and says, well, there's no trading, it's not real. It is real. It's real if you understand the Danielcode. It's real if you have the accuracy and precision of the Danielcode. It's not real otherwise. But look at this. 1, 2, 3, 4, 5, 6 highs. Marvelous, isn't it? And that's just one set of retracements of the early two very, very early swings. So if you like that work of the retracement tool, get subscribed to our website pro package. We'll include the retracement tool and the DC time tool in your package. One trade will trade for about 7 or 8 years. We had a massive natural gas trade recently, but boy, it's a market and a half, isn't it? Have a look at success today. We're into the natural gas. We're long only for the second day of this particular strike up, plus $9,800 in 2 days in natural gas. but it's everywhere. $3,000 in the S&P with a sell signal for tonight, 3,700 in coffee, 9,800 in natural gas, 1,600 in the Russell, 2,000 in US T-bonds. Wonderful stuff, isn't it? Okay, so I urge you with our new arrangements and new price levels. This is our inflation busting offer, make life easier for you. Once you know this stuff, you're set for life. This is a lesson in a new business for you, a new lifestyle for you, or pass it on to your children. It is an amazing gift. Those of you who've been with us for a long time know all of that. Email me, jneedham@thedanielcode.com. Let me know that you're interested in doing the tutorial and make your reservation, and we'll get on with it as soon as we can. From Greg, Greg Palladini, time and price combined to natural gas trade. A thing of beauty, boy, oh boy, isn't it, eh? A thing of great beauty. Wonderful, wonderful. And I'm glad Greg's enjoying it too. So remember, the business of trading futures and Forex is not to be right. That might sound funny to you, but the business of trading is making money. That's what we do it for. If you haven't already, folks, you're most welcome to get the, Greg nailed that trade. It's wonderful stuff, isn't it, mate? Makes you happy, makes you joyous. I say to people, trading, it's joyous, it's wonderful. It makes you happy, it makes you feel good. Counting the money makes you feel even better. But once you know the Daniel Code, you understand that markets are not threatening. Markets are there to reward you. That's what they're there for. They were there to take money away from the mugs and give it to those who understand. And once you've done a Daniel Code tutorial, you'll certainly understand. If you're not quite ready for that, folks, just sign up to one of our subscription services. We have our TO3 turn signals every day, TO3 plus signals, which is the same turn signals plus some extensions every day. Frank DB has the Fourth Seal commentary every Monday, and we have the Red Hot 6S trades as well. If you haven't already had a free trial, please go to the website www.thedanielcode.com. Simply click the free trial button and register. You only need a password and a username. If you have any problems, likely you've had a subscription in the past and the database remembers you, just contact Terry, support@thedanielcode.com, and he will fix that up for you. And finally, the disclaimer and disclosures. Do take it seriously, folks, please. It's very, very easy to lose money if you don't know what you're doing. The good news is it's equally easy to make a whole lot of money if you do know what you're doing. So that's it for the moment. Jeff Sherburne, thank you for being with us, Jeff, and sticking with us. I'm delighted to see you here. For all of you, thank you for being with us. It's about time. Not always I'm on time. This time I am. As Greg says, so true. When you understand the DC system, it gives you a sense of control in your life, and that is true happiness. Those are very wise words from Greg, folks. He's, as I say, very, very good trader. Has done 2 tutorials, the second one to learn trading price, and his view is that when you understand the Daniel Code system, it gives you a great sense of control in your life, and that is true happiness, and it is. Once you know this stuff, life's a breeze, life's a ball, life's wonderful. And it's so sad that so many people feel threatened by markets, are frightened by markets. You don't have to be. You're frightened of something you don't understand. Once you know the Daniel Code, as Greg says, once you understand the Daniel Code system, it gives you a sense of control in your life. And that is true happiness. We'll leave that there, folks. I wish you a wonderful weekend, and I hope that you'll be able to join us when we do our next webinar in a fortnight's time. Bye-bye for now.